20th January 2023, Friday. We are just 2 days away from the Chinese New Year. Alright, so guys, wish you 恭喜发财 and happy Chinese New Year. Now, while Yellen is very concerned because of the US debt ceiling, but Cathie Wood is not, apparently. She's buying more Tesla. Yes, indeed, she just bought another 700,000 shares, equivalent to about $10 million. Is it? Or $100 million? Yes, indeed. She's been buying a lot of Tesla, alright? Her point is this: she's selling her other EVs company, the Chinese related stuff, EVs, and then buying more Tesla. Is it a smart move? Well, if you ask me for long term, it is a smart move. But I just feel that Tesla got more downside to go, and I think ARKK will be again hit once again. So let us watch this video, but do not do your research management, and thank you AIMS for the kind sponsorship. Right, let's recap what happened last night first. Wow, again, the Dow Jones dropped by another 252 points. Nasdaq lost 114, and S&P 500 lost 30 points and went below 3,900. Now, I have been advocating selling for the last few days, and I really hope that you've done yourself a favor, because most likely there could be more selling the next 2 weeks. Of course, Microsoft leads the charge with 1.65%, with Amazon 1.86%, and you can see that Amazon is down back below the 1 trillion market cap once again. So all these concern right now is that the people are speculating that if the sales is dropping down, people are buying power is getting lesser, what will happen to Amazon? And most likely Amazon may need to lay off more people, and that will lead to what they all been talking about, the recession note. Alright. So we can see over here Apple hardly moved last night, but Google bucked the trend by going up by 2%, according with Meta. Alright, if Meta and Google were down, I can tell you this, the Nasdaq will be worse. Alright, so what is the story here? Well, it is a third loss for the Dow and S&P 500, and overall itself for this week, Nasdaq and S&P is down by 2%. Okay, now the main driver is that it was the short covering, the risk bid, the lower yield that actually propelled the market higher last week. So now all this is over, short covering, if the short squeeze is done, then of course people will get to go back to profit taking once again. And of course the Labour Department signals that the labour market is very resilient despite the so-called slowing economy. So if that is the case itself, right, despite all the big tech post-pandemic layoff, the job market remained hot. We know that, right? Amazon laid off 10,000, and I think as much as 15,000, 18,000, I think. So with all the tech people are being laid off, right, the job market is still pretty hot. That means that Federal Reserve still got a lot of room, in a way, to really increase interest rate, because the main thing is that when you have high employment, people will spend more. When they spend more, inflation will still be there. So what you need to do is that give some pain to the market, and then when the spending reduces, and that's where inflation will come down. But apparently, it's not happening right now. So let's look at Netflix, alright. Netflix earnings, alright. I'm sorry, guys. I expected to be bad. It came out better. But when I look at it again, I really cannot understand how it really works. But of course, this is how Wall Street does it. So first of all, Netflix couldn't go past 333, the technical level that I mentioned, right? But the earnings came out showing that Netflix blow away expectation on the subscriber numbers. Now, the earnings is terrible, but the market focused on the 7.66 million paid subscribers during the fourth quarter, more than the 4.57 that the market was expecting. So I'm not too sure where they get 3 million subscribers from, probably somewhere, somehow. But the thing is that we don't see much big blockbuster from Netflix recently. But again, it's going to be one thing that people always look at. And the thing is, guys, look at it right now. The post-market now is up to 338. Okay, that means much higher by my technical point. And the thing is this, what's the main reason? If you look carefully in your earnings, my goodness, okay, this is the diluted EPS for fourth quarter year 2022. It's only 12 cents. Oh my goodness. The revenue is there, 7.8, but it's lower than $7.8 billion. It's lower than third quarter. But the main thing is that look at the earnings, it's only like 12 cents. So imagine a company release a data of sort, and yet the share price can go up and gap up by almost $22. I'm just going to tell you this is just going to be a pump and dump. Alright, so be very, very careful. This is going to be a pump and dump in my opinion. So Cathie Wood is buying a lot of Tesla. That's the reason why Tesla from 109 all the way went back to 137. Volume has been pretty strong volume, If you look at it right now, the volume here itself, you can see the volume here is so much more than the volume over here. Okay, so why? Because first of all, the price came down to a very, very good price, 109. It's a very strong technical point that I mentioned over the last few times. And I also mentioned to you that 137 to 138 will be the resistance. And we can see right now the market is actually hanging around here. Okay, so what is Cathie Wood doing? As you can see on the mainstream media, Cathie Wood is very bullish on Tesla, and she sees this stock going about 5 times. My God, okay? So now $137. So if Tesla go to $650, she's going to get it right again, or $750 in this case. All right, she's been buying, and she's been buying non-stop. So the thing is this, she feels that, right, the conviction in Tesla is still remains strong. She'll keep buying deep in the electric vehicle company. All right, so she believes that, right, from compared to the previous electric vehicles, it will be a 5-fold increase in this stock in the next 5 years. All right, and of course, right now it's only like the P is about 13. Accordingly, that will be very good. All these information tells you that that's why Cathie Wood bought in 750,000 shares of the Tesla. All right, so again, where people buying like this relentlessly, those who copy your homework may be buying. By my opinion, if 138 fail, then 109 is a very critical support level. You can see right here. And if the market loses, if the thing goes below 109, Tesla share can go down all the way to 92. And still, I've been saying this, $65 is something that I'm really looking out for, right? $65, okay, for Tesla. Okay. All right, so let's hope that you will get it correct while I give my reservation call. All right, so the thing is this, we all know that for ARKK, right, there were outflow of $503 million in the past month. But for the entire year, they got in about 1.47 billion inflows over the year. So if you do the minus sign, it's about 1/3 already. And of course, if that's the case, it's all right. We're not too sure in total, it's all right. Any big withdrawal, this has only happened past month. So if the market is pulling funds away, what do you think? So for ARKK, I can see this very clear right now. $34 is a very critical level. It has to stay above 34 for it to recover, maybe back to 42. Okay, that's whereby you don't think changes. But if the market fails to stay above 34, then it'll be one-way traffic down to $30. Okay, I'm not going to be bothered, but I'm telling you this, guys. Cathie Wood shares have been coming down really very steadily, and this is no joke. So if that's the case, then that means the chance of going to see downside is further, and downside can be as low. If you don't heard that, this can be going down as low as $26. All right, that's something that I think Cathie Wood can't stomach, if you ask me yourself. Okay, so that is the Cathie Wood with this Tesla. Let's look at what the second IC, the Federal Reserve, say. All right, Leanne Brenner says that she sees high rates ahead even with progress on inflation. Now, what does it really mean? Now, basically, it says that, right, the Federal Reserve will not waver in its commitment to tame prices, all right, and she felt that, right, the whole thing is that there should be another 0.25 interest rate hike, but internally, there's some saying that she actually wanted a 50 basis point. So you can read on different articles, different sort of sharing, but you can see over here from CNBC, housing costs remain high, but Brenner and Fed officials expect to do something to ease the costs. Okay. Then of course the other thing is that you can see right now that what they call the 5.1% fixed, the interest rate itself to hit 5.1. All right. Now at 4.25 already causing a lot of problem. If it hit 5%, I think the whole market will break. So once again, we are not too sure what's going to happen next, but we all know that we just need to be very, very careful. It can be a spillover, especially like crude oil, so we need to watch it. Yeah. Okay. So according to this Brenner, I think inflation is high. It will take time and revolves it back to 2%. Very confident, she says, and she's determined to stay the course. So I really don't know how she bring it down, but I'm pretty sure unemployment will be one of the arsenal that she will be using quite a fair bit. Yeah. All right. So let's continue. Okay. You can see the U.S. debt right now. The U.S. debt is ridiculous. It's already 431.5. Let me bring you live right now about this particular amount, this national debt. This is going live right now. You can see that the national debt, the U.S. national GDP is trading at 31. Right, 31. This big one here itself. So 31.5 is already hit the peak. So that's why traders, you need to be very, very careful. This is already $31.5 trillion, okay? So you can look on it itself, you can see that very clear that our debt is increasing every single day, multiplied by the interest. Who can bear this at all, right? Okay? So that is what happened with Brenna. She's a bit more dovish, but still she needs to play calm. And now she's trying to convince and see whether what we can have later on. Yep. Okay. Now, oops, there's some technical issue here. Just give me a short moment to repair this. Now, we all have been telling you that Yellen is very, very, very concerned regarding with the current situation right now. So let's take a look what Yellen has to worry about. Okay, so Yellen says the Treasury is taking extraordinary measures to avoid default as US hit debt ceiling, which is the 4.5. All right, so what are the extraordinary measures? Well, I don't know. It will come out very soon. So let's see what happened. And Yellen is pushing Congress to pass a bill to leave the country by the $3.4 trillion debt limit. All right, we all know that it's not easy, but it's really a help here. If not, this Yellen and friends will have very, very difficult position, and then of course things can get even worse. Okay, so you can see right now that this is the in the House address to Speaker Kevin. All right, Yellen says to the Treasury will suspend new investment in the civil service retrenchment and disability funds and the postal service retiree health benefits. Okay, in short, they will not be getting anything else. All right, because there is some more complication here. And the thing is this, Congress really must pass this. If not, right, everything is stuck. Okay, so it's like we need to get this up ASAP. But the thing is that you can see right now, this belongs to Japan, right? You can see right here is that the liability and capability about people and people like us. So you can see right here, there's a hole here. I know that there's a problem. I can just click away and just move on. Well, that wasn't me back then. Only now I've changed a bit. So it's the same thing right now. If you look at it, we are identical, okay? We are identical. So which means that where you are, what's going to happen right now is that this is actually not a good sign for this, all right? Things is not going to be good. So all this information tells me that we need to be very careful for next year. Now the initial jobless claim basically go down lower, and that's not what the Federal Reserve wants. He wants the initial jobless claim to go crazy. So that means that people are getting jobless. That means the funding will be an issue, blah, blah, blah. So therefore, inflation will come down within the next 1 year to 2 years, if you look at the overall of it. Okay, the initial jobless claims, you can see numbers are really dropping down at a pretty fast stage itself. And you can see this is a very important chart. I need to squeeze in to take a look. Now, the one in this candlesticks is the Dow Jones Industrial Average. As you can see over here, whereby it was last year, here this thing has been there. And then you can see almost instantly the market rebounded by about 500 points because of that, right? Because of the unemployment data reaching at the low end. But the thing is that as time goes by, we've noticed that there's another place right here itself whereby you can see that it's coming down to that same level. But do we have a lot of employment? Well, including some of the recent one, it is. But you look at the bigger picture right now, I think this is what you want to see. All right, these are the employees that are out of job. Amazon 18,000, all right, Alphabet 2,300, Coinbase 2,000, Meta 11,000, Lean 700, Netflix 750, and Snap and Robinhood both 1,000. So all these tells you that, right, the biggest holder, all right, over here is Meta. Okay, it may not be. It's Amazon and Alphabet. These two are the main driver. So the question is, what do you think will happen? If this number start to really goes up, then by default, this will have to come down. And I'm waiting for that day to come so that we can actually see the bigger movement of the market. Yep. Now, the thing is that we all know that for 2023, there's a lot of layoff coming in. And this is like in this November and January. So let's say we do a 3 month thingy. So by April, should be pretty safe. And we see how it goes on there. So, okay, all right, so this is going to be very important. We take a look. Now, look at my technical, guys. My technical shows you very clear that I told you that 33,258 is a very important technical level. Once the market goes below it, no matter how you say, I will be watching this very closely, and I believe that the first target will still be 32,334. All right, this is something that I think will likely happen. Well, because the market took about 5 days to go up and it took about 3 days to come down with a lot of stuff. So most likely this will push the market down towards the 32,343 level. Okay, so traders need to watch out for this. Now, this is the 5-minute retracement method. You can only use for those stocks that are and markets are at all-time high. Then it will make more sense. Yeah. Now, let's talk about the reopening of China, and that is something that I'm pretty concerned right now. And the thing is this, if you look at some of the images that were sent across the internet, wow, this is really insane. We're talking about so many people congregating over here because they need to let their loved one go. And of course, this is they make makeshift graves that are already on standby or been done, and telling people that not to go near. But again, if all of them get infected, right, then what's the point? So all these things tells you that to be very careful, because things can go wild one day. So let's listen to what Bloomberg has to say regarding about this this mothership. Yeah. Okay, let's go.
Suddenly, in the middle of winter, by the way, and also right ahead of the big human migration, 2.1 billion trips are expected to be taken by Chinese as urbanites and migrant workers and students, urban elites, all head back to the countryside or their ancestral homes during a 40-day period that is called the Spring Festival. This year, it's earlier than usual. It's in late January. Essentially, starting this weekend, you're going to see absolutely packed airplanes, trains, buses, ferries, you name it. And if you've never experienced the migration firsthand in China, I do not recommend it necessarily, because it is a crush of people. So yes, there's obviously concern that this is going to be a massive super spreader event. Some estimates already put this COVID wave spreading through urban centers of China at about 900 million infections already out of a population of 1.4 billion. Now, in the countryside, where the elderly are, in greater...
All right, so the thing is this, you heard, there are some numbers are saying entire China, 1.4 billion people, as many as 900 million people, right, got COVID before. And the thing is the death itself, right, some reports are saying that it went way above, a very crazy figure, more than 10 million, some say 30 million, some say even 100 million. Now, a lot of things is ongoing right now, but without the confirmation on official from China's side, it's very difficult to make a position or stand here. But my biggest concern is not this, but this very incredible chart. Right, take a look here. Now, the thing is this, today is the 20th of January 2023, all right? So that is where the chart is showing me right now. If I move back all the way to this point here, which is same thing here, is 20th of January, but it's 2020, all right? So the difference is that was Monday and today is Friday, but it's no different to me. We're going to enter in the Chinese New Year soon. Now, on that time and period, Chinese New Year was 3rd of February, that was here. But what is crazy is that you can see, it was here, 3rd of February was here, right? It was crazy that the thing is that after that itself, right, the market plunged. The market plunged more than 2,000 points in a span of less than 6-7 days. So my view is that, is it going to happen for China? Is something big going to happen? Or something disastrous? I'm not too sure, all right? But it's just that eerily, they both have the same, in terms of date form in a way, and they are almost the same price. And hence, I believe that if this wave to come down, take note of the moving average, because every time any pullback, the moving average will still be part of it, okay? Very clear, all right? So all I can say is this, guys, to be very careful, because you don't want to be caught by this, and then it could be a long holiday. Things can get very ugly if you have your wrong side on the track, and then your margin will wipe you out if the market keep on going crazy. Yeah, I've seen this before. You just have to be very careful, okay? All right, so let's look at the charts for today to wrap it up for this week. Now, the Dow Jones is now coming very near, or in fact, it's touching my KFC level. My KFC level is 33,031, and we are now here right now trading below it. Not a good sign. Now, if the market breaks below this 33,031, the next target will be 32,553, and I kind of believe that it will go there because there were 2 occasions, right? It went there, right, back to back in a way. So you need to watch out for this, okay? All right, so this is the figure to watch out for. Then for NASDAQ, we can see the huge pullback on the chart 2 days ago. So most likely, in my opinion, we're going to see some more selling, and this should bring it down all the way to this point here. And this should be, what's the level here? Let me just check a quick one here. Okay, here we go. Then you will see 11,200. All right, now where we are now, okay, 11,300, not too far away, really not too far away. All right, and then of course for Hong Kong, well, Hang Seng just broke above my KFC level beautifully, and one time went all the way up. Okay, the whole thing is from where it is here, the breakout point to the current price is more than 1,800. Wow, that's a lot of money, right? So if you know to capture it, it'd be really a big jackpot for you. All right, so that is the KFC level on a few market, and you will look at gold as required. This is gold right now. Gold KFC is 1921. So the last few days before we meet a big stronger upthrust, you can see the market just couldn't go past the important technical point. So what if happened tonight? Gold goes below this technical point. Then what will happen? Then there'll be no more. You're going to follow the KFC level closely. If the market stays below that, then selling is kind of expected. Yeah, so you need to be very, very careful on this. Okay, all right. So that is all for this one, KFC. Let's look at the my TWB system charts right now. So you can see pretty clear that we have the market Dow Jones breaking below 33,093. So which means that the new KFC level somewhere around here will be very important. As I mentioned to you, it could be 32,953. All right, we will look at it. Okay. Now the thing is this: if the market do come down, the next thing that it should be going is the BNB SL level, which is actually trading at 32,570, 32570. So watch out for this. If the market really pulls back, this will be the first thing to look out for. Hopefully it stays, and then after that, things can recover for life. Very good. Right. If the market keep on coming down, breaking below the BNB support level at 32,570, can send it down all the way to 31,660. Yeah. Currently now KSI is green, KRW is red, so it's a bit of mixed signal here. So that's why the market is kind of sideways. But for Nasdaq, it's a different story. Nasdaq, the red arrow means that the KSI and the KRW are in line. Hence, therefore, if the market can't break about 11,367, the MLP, which is I can see on the screen, yeah, you tried a little bit, but couldn't stay upright, and it pulls back down. Once you go to 11,085, this is most likely going to be a very challenging time. And if it goes down lower, we can see it going down all the way to 11,116 level. All right, this is going to be a very, very important aspect here, traders. You need to watch out for. Okay, S&P 500, where are you? Here we go. S&P 500 has missed the 4020 by a fraction. We saw it before, but now it's testing below the BNB RL, which is at 3909. All right, if you cannot take it anymore, then just give up. But if you can take it, then the downside can be as low as here, which is approximately 3884. Okay, that is thing here. And KSI and KRW are both in red. That's why the red arrow appears. That means that the selling potential is really, really there. All right, so let us see really what happened next. Okay, now that we've done all the S&P, the Nasdaq, so the S&P 500 being a quick one. Where are you? S&P 500. There we go. Okay, some technical error here. Okay, here we go, Nikkei. So Nikkei has been going up. Nikkei had broke the BNB RL level convincingly, and it also break the pivot one 26621. So most likely it's going to go all the way to 26,064, right? If that's the case, right? This is what we're looking at. But if the Nikkei turns down, the support is still pretty strong because both KSI and the KRW are all on your side. Yeah. Okay, all right, let's look at the currency market for the quick one. Dollar yen is rebounding as I'm speaking right now. I've been telling you guys, dollar yen most likely will rebound to 130.95, and I think it's happening. And of course, if the dollar is rebounding, the yields will be going up, and hence, therefore, equity market attention span will be reduced. Yeah, so take note of that. So the thing is this: with the RSI, the KRW, both of them in the same direction, then most likely we will see this 130.95 getting traded. But if it's going to be more, then the downside can be all the way to 123.55. Yeah. Okay, so that is the dollar yen. For pound has reached my BNB level, which is 1.24. How much is that again? All right, 1.2431. Yep. Now for today, you can see right now the the British pound is trading at 1.23679. So if the market breaks below MLP and OP and pivot 2, then some selling is kind of expected, and we do see it coming down to maybe here BNB, this RL level, and of course you have the BNB SL level. Okay, so you may need to watch out for this. Okay. Last one is Euro. For the currency market is trying to firm itself. I mentioned to you Euro will fall a bit, and yes, it's happening. So Euro has to move away and try to don't touch anybody, right? On the upside here, because the upside could go all the way to 1088 level. The downside could go down to maybe 1.0766. All right, so we're gonna watch this later on. Okay. All right, so these are all the currency market. Let's look at the gold and silver. For gold, it's now trading a bit up again, but to 1931. That's now was lower to 1928. Okay, so anyway, it doesn't matter. The gold itself, the market has blast past the BNB RL level. So by right, if it pulls back, anytime it comes down to this point here, it can do bit. You can watch out for this. It may touch and recover once again. All right, this is all possible. We will watch this very, very closely. All right. Okay. So that is the gold market 1955 target, support at 1903. Okay, this one 1903, 1966. Okay, and then we will have our silver. Let's bring it down. Silver did a very strong retaliation move. I told you yesterday, silver, if it comes down to this $23.21, you can buy some silver, and silver really shot up. I'm not happy because this is like, you're trying to buy it low for you to fall to trade. So of course, it's a very good trading. You can see that you buy near the low and sell the high. And the thing is this: if you can, just move the short list higher, because I'm sure more people want to know. Now 2486 is the short term target 2486. So watch out for that. All right. Last but not least, we have the Bitcoin. Okay. Now there are some rumors going to say that Bitcoin might be able to survive the storm. All right. So let's see how it goes. Because now more and more people are looking to buy Bitcoin, but we all know that this is like the calm before the storm. All right, so consolidation for the longest of time. If one day someone or somebody just come in and hit it hard, we can come back and see 19,000 once again. Because KSI is totally red, and KCX also is blanco, but it's been up for many months. And again, something to share with you guys that regarding this. If you're really thinking about this, if the unemployment is going to come in, usually they serve you 1 month or 2 months bonus, right? Or at least some sort of notification of lesser bonus. So the thing is that we can see here that we need to be very, very careful, because things can get very messy. Yep. All right, that will be all for today. Hope you have a great Chinese New Year. This is Cal signing off. Bye-bye.